Hello and welcome. Thanks for stopping in. Uh, Tonight we're going to discuss a little bit about inflation, how it affects you and your money, and we're going to basically discuss, what to do with your money based on a lot of smart people believe is the impending hyperinflation event that will be coming. So with that, let's get into it. So you may be hearing that inflation is out of control. We have supply chain issues with lumber, microchips, crude oil, copper, tin, chemicals like chlorine. Chlorine's a fun one because that may get worse because as people start opening their pools, as weather gets better in the northern parts of the U.S. I mean, it's beautiful outside here today, and I'll be going out there as soon as I'm done here. But you know, these supply chain things are an issue right now. Also, pro tip for if you own your own pool, borax, just Google search borax in pools and you can figure out how to use it to reduce your use of chlorine. It's a little extra for those people who have pools. Anyway, if there is some commodity that you use to build a house, electronics, consumer goods, you'll likely find that a supply chain issue is the underlying, if there's an underlying resource for it, is just making the price skyrocket. Take a stroll through your neighborhood Lowe's or Home Depot, and you'll walk around the lumber section, plumbing section, or electric section. Excuse me. The prices are insane. Housing prices are going up not only because there's a small amount of houses on the market, but because building of new construction is very costly, like insanely expensive right now, as compared to where it was a year ago. So many people believe that these prices will come down eventually because the supply chain issues will be corrected eventually, and that is absolutely correct. The supply of these items will rebound, and you will have enough supply to feed the demand. And based on simple economics, you can rest assured that the prices will retract when that happens. But how long until that happens? And the better question is, will they come back down as we continue to get pounded by inflation for other reasons? So first, I guess we should probably discuss, we all want to start from the same point as to what inflation actually is. So we should define what inflation is and what hyperinflation is. So inflation is defined as a rise in the general level of price for goods and services over a period of time. And essentially it's that definition means it's costing you more to buy things or have people do labor for you over that period of time. Hyperinflation gets a little more technical. It's basically inflation on steroids. And the definition of hyperinflation can be argued to some points as to what time frame you're looking for to put it on, but most people would consider the price of goods or services that shoot up by 50% or more within 3 months, that would be considered something like a hyperinflation event. So there are two trains of thought on inflation, and we're currently experiencing the first train of thought is it's going to be short-lived. All these levels because we're comparing it for year-over-year data, and this time last year we were shut down all over because of the pandemic, and the other thought is that because of the trillions upon trillions of dollars, fresh, new, minted, printed dollars that the Fed has just been printing out to pay for all these programs and assistance, and the trillions and trillions of dollars that the current administration wants to continue to print, we are going to see a massive spike in goods and services because we are devaluing the dollar at a rate the likes of which have never been seen, because we've never seen so much money printed in such a short amount of time. So both of these arguments can be true at the same time. We are in the throes of, we were in the throes of a pandemic last year, I guess is what I want to say. And those who base their projections off of last year's numbers and predicted inflation, that can partially be right. And the fact that we're having supply chain issues because of how people work their projections for year over year data, they, were off based on that. And in a few months, we'll see a cooling off from the, rapid inflationary increase because supply chains were, wrong. That'll all right itself eventually. And the data from later in that year, we were gaining and boosting. So there should, those numbers will stabilize. So that will no longer be an issue as far as inflation is concerned. But the other side of that coin, the part where they're printing trillions and trillions of dollars, you cannot print 25% or more of the current circulating supply of money in a year and change and think you're not going to feel any ramification from that. It just isn't a thing that's possible. You might kick the can down the road for a little bit, but at the end of the day, physics will take hold. And when you inflate a balloon so close to its breaking point that one more breath of hot air into it will pop it, and you blow that breath of hot air into it, you can't be surprised when the balloon pops. So I guess the question is, what can we glean from this? Is that, basically both arguments, there will be some sort of inflationary problem where we will be paying up the wazoo for goods and services. I think what actually happens is that we will see a massive spike for the next 2 months in the cost of things. And then once supply chains are restored to norms, you'll see a drop, but not to the lows that we had before all this madness, because we've already printed a shit ton of money. And you will not see, I honestly don't think you'll see the prices drop all that much lower. You'll see them drop from where they are now. But then you're going to start seeing a slow and steady rise in price of things as things become open completely. More people getting back to work, unemployment comes down, and more people starting to go out and spend their money because they have the security of jobs and know where their next paycheck's coming from. Couple months of super high prices, followed by a decrease in prices for a few months, and then things stabilize, and then a slow burn inflation where things will continue to go up, possibly faster than that 2% that Papa J-Pa wants. So be on the lookout for that. And, you're going to see this kind of cycle where it's basically the markets will go up, Feds will raise rates, the markets will panic and go down, and things are going to get weird. So what should you do with your money? Should you not invest because the Feds raising rates and the inevitable market retraction to the downside? Should you hold your cash in the bank or in a mattress, while you wait all this madness out? Well, it's time for an anecdotal story of someone's grandparent who they stuffed $50,000 of cash into a secret compartment in their house sometime during the 70s. So this guy's grandpa told his grandson that on his deathbed, there's a stash of cash in the house. And the grandson went to the house and he found this boon of $50K. And $50K is still a lot of money. The grandfather saved it in the 70s, mid-70s era, and kept it around just in case. 2019 came, and the grandpa tells the grandson the story of this 50-year-old cash stash, and, passes away. And that $50K from the 70s would have the same buying power as $350K today if he'd spent it in the 70s. But thanks to inflation over 50 years, the $50K, which is still a sizable chunk of money, now has about 1/6 of the buying power that it had when Grandpa first saved it. So if he'd invested that money in stocks or, even left it in a bank, it would have been worth much more than the $50K it was worth today. If he just put, something that mimicked a market, he would have could have been possibly a, multimillionaire. Over that 50 years. The average rate of inflation is 3.5 per year since the 70s, whereas the average return of, like S&P, Dow Jones is usually between 5 and 8% over the last 20 years. So the compound interest of that, that money would have outpaced inflation and at least kept the family with the same amount of buying power as they'd had in the 70s, but probably gotten them even more. So what's this story have to do with the price of tea in China, I guess? So, should you hoard your cash and wait for the market volatility to die down and for inflation to slow? I can't tell you what to do, but I can tell you that I wouldn't do that. I would rather have my money invested, and even if it goes down short term, I'm taking the long term look approach. And you take that long term picture in and know that even though if you don't agree with the current monetary policies and they're not favorable to you, every 4 to 6 years you're going to find that the monetary policies of the US change. And on average, if you're, just investing in something like SPY, you will outperform inflation by around double. And I'd rather have my money making money for me than losing money to inflation from the passage of time and shitty economic policies and money printing. So while I cannot predict with certainty how this is going to all play out in the next year, I can tell you that even if we experience a hyperinflation event with continued inflation, we will eventually right the ship. You have to believe that, at least at some level. Unless you think we, the United States, end up like Rome. So until then, you find yourself somewhere to park that cash. Maybe not in stocks, maybe not in bonds if you're worried about the inevitable rate hikes and downturns from inflation. But look at something like collectibles. There's a lot of different collectible assets that have been booming lately. Not even just like cryptocurrencies is another one that's been shooting up as money from large companies who also, don't want to hold the dollar start piling in. Usually a good indicator of where to put your money is to follow where big money goes. And big money has been going into cryptos. That's why you've seen it rise from 13,000 to 56, 58, 60,000 per Bitcoin in the last, 3 to 4 months. But even things like card games like Pokemon, Magic, Flesh and Blood, there's all these different card games out there that those cards and sealed product are holding and rising in value as more people pile into that because they're collectibles to them. There's asset classes that are out there that are out of the norm, but they can always be traded for dollars if the time or need arises. It's basically a vehicle to park your money, and that's what rich people are doing because they don't want to hold cash because the warning bells have been rung about inflation for at least the short term. So whatever you're going to do it soon because the more money you hold, the more value you lose. And that's my thoughts on it. If you like this, find us on SoundCloud or Google Podcasts, Apple Podcasts, wherever you find podcasts, and listen to the whole episode. Thanks for stopping by. Be sure to like and subscribe.